Why did Hindenburg call SEBI's show cause notice nonsense? Why is Kotak Mahindra Bank being dragged across the floor now? And how much money did the US short seller make from this mess? Let us decode everything in today's ET Markets Decoder. I'm Neha Vashisht Mahajan. Let's go. A new update in the Adani Hindenburg Saga has come up. Hindenburg was recently slapped with a SEBI show cause notice for alleged violations in placing bets on Adani stocks. In 2023, Hindenburg Research released a report that accused Gautam Adani of pulling the largest con in corporate history. This led to massive losses when it comes to the Adani Group stocks. SEBI's notice alleged that Hindenburg violated Indian regulations by failing to provide adequate disclosures and engaging in questionable trading and profit-making practices. Not only this, the name of Kotak Mahindra Bank, one of India's biggest private banks, has also been dragged into the issue. The New York-based firm Hindenburg termed the show cause notice as nonsense and concocted to serve a preordained purpose, an attempt to silence and intimidate those who expose corruption and fraud perpetrated by the most powerful individuals in India. Along with this, the firm admitted that it was short on Adani, meaning it had anticipated a fall in the value of stock and thus traded on it. As per a Bloomberg report, the short seller made gains of about $4 million through these shorts. It also made $31,000 by shorting Adani's US bonds, which Hindenburg said was a tiny position. Hindenburg claimed it hardly made money by shorting Adani stocks and bonds. In its response, it said, net of legal and research expenses, including time, salaries, compensation and costs for a 2-year global investigation, we may come out ahead of break-even on our Adani short. Now, what about the Kotak twist? US-based firm Hindenburg disclosed that Kotak Bank created and oversaw offshore fund structure that was used by its investor partner to bet against the Adani conglomerate. It flagged SEBI's failure to name Kotak Mahindra Bank's role in the dealings and slammed SEBI for masking the bank's name to protect yet another powerful Indian businessman from the prospect of scrutiny. It said while SEBI seemingly tied itself in knots to claim jurisdiction over us, its notice conspicuously failed to name the party that has an actual tie to India. Kotak Bank, one of India's largest banks and brokerage firms founded by Uday Kotak, which created and oversaw the offshore fund structure used by our investor partner to bet against Adani. Instead, it simply named the K India Opportunities Fund and masked the Kotak name with the acronym KMIL. In a response dated July 2nd, Kotak said that Kotak Mahindra International Limited or KMIL and KIOF state that Hindenburg has never been a client of the firm, nor has it ever been an investor in the fund. The fund was never aware that Hindenburg was a partner of any of its investors. KMIL has also received a confirmation and declaration from the fund's investor that its investments were made as a principal and not on behalf of any other person. Now, coming to the allegations on SEBI and the Indian government, Hindenburg also said that this wasn't a mystery. Virtually everyone on earth knew we were short on Adani because we were prominently and repeatedly disclosing it. It also said one might think that a securities regulator would be interested in meaningfully pursuing the parties that ran a secret offshore shell empire, engaging in billions of dollars of undisclosed related party transactions through public companies while propping up its stocks through undisclosed share ownership via a network of sham investment entities. Instead, the regulator took issue with things like our use of the word scandal when describing multiple prior instances of Adani promoters being charged with fraud by Indian regulators and our quoting of an individual that alleged SEBI is corrupt and works hand in glove with conglomerates like Adani to help it skirt regulations. It also called out Gautam Adani and said that he failed to address the allegations and has offered blanket denials of subsequent media allegations. In the response, Hindenburg also said that the firm is proud of the work they did on Adani. The Adani Group, which refuted the allegations, suffered a loss of as much as $150 billion in combined market value after the report, but has since rebounded.